Don't call it a comeback yet. The stock market surge of 2023 was derailed in the third quarter. Hello and thanks for checking out this week's Fastest 4 Minutes in Finance. I'm Scott Inman. Momentum is a real thing. It is in sports and it is in the stock market. Just take a college football game. How often do you see a team fall behind and nothing seems to be going right, but one play changes all of that, and all of a sudden the comeback is on. The team trailing seems to do everything right. Now, sometimes that lasts for the rest of the game and the comeback is complete, but sometimes the other team steals the momentum back. It kind of feels like what has happened in the stock market in Q3. September was the momentum stealer. The S&P 500 dropped nearly 5% last month, landing the index in the red for the quarter, down 3.3%. Now, this is not all that uncommon in most years. September is historically one of the worst months for the market. A couple of market sectors did hold their momentum. Energy was the best performer, benefiting from higher oil prices, and communication services were up 2.8% as a whole, led by Google and Meta. The worst performers, utilities, down 10.1%. Now, the good news here is the S&P 500 is still up 10% year to date and more than 11% over the past 12 months. The communication services sector is up year to date 39.4%. Technology up 33.8%. And consumer discretionary up 25.7%. So the comeback is not over, but it has hit a wall. So will the market seize the momentum back in the fourth quarter? Well, our partners at LPL Research believe earnings estimates will still be strong for the rest of 2023 and even into 2024, and their estimate is for $230 in S&P 500 earnings per share next year. That would be an increase of 8% from their 2023 per share estimate. That doesn't mean the market's going to go up by 8%, but it does mean the expectation here is that we are no longer in an earnings recession, meaning corporate America continues to show resilience in the face of rising borrowing costs. There are lots of factors that could tip the scales in either direction, as always, but the long-predicted recession doesn't look likely to materialize this year. The Fed may be done with interest rate hikes for a while, but low unemployment and stubborn inflation continue to have their attention. But here's the best news. While the fourth quarter of a football game has a timed ending, and if the comeback is not complete, it ends in a loss, the fourth quarter of 2023 does not mark the end of the stock market. As a stock investor, you should not be banking on a comeback in 3 months, but you should be banking on a comeback in the next decade. The current economic and market conditions once again highlight the need for a diversified investment strategy because it's rare that everything does well at the same time, and it's impossible to predict what will do better over a short period of time. Thanks for watching.